Good morning, traders. How is everybody doing? I hope you're all having a fantastic weekend so far and taking the time to use your social distancing and possible quarantines, depending on your location, to do a little bit of extra market research. So I am trading a lot of the EMini in my trading combine right now. I'm taking a few trades in the micro in my personal portfolio, but I am doing a lot of work in the trading combine right now, trying to get that funded account, which I'm super excited about. I really do appreciate the environment. It is causing me to focus substantially more on risk management, which is something that I think we all struggle with a bit as traders, especially new traders. So I highly recommend giving some sort of monitored trading combine with defined rules a shot if you haven't done so already. Okay, so what we're looking at here is the EMini S&P, and I am charting on the thinkorswim platform. This is set to max time available and 1 month. So each bar represents a month, and we are looking as far back as 1983. I've got some Fibonacci retracement lines drawn from the low up to the high where we started to see this decline, and it is respecting some of those numbers, not all of them, but I've kind of just got them on there for reference. So I've got the TPO profile up right now. It's actually designed to work more based on the 30-minute chart, but I've got the study set, so I haven't pulled it off there. But it is interesting just to note the low order flow areas, even on those larger time frames, even though it's not necessarily set for those time frames. I'm going to go ahead and just draw in a couple because I have seen price action move into the areas defined on the larger time frames when I have drawn the market profile in there. So it'll be interesting to watch. Here we go. All right, so let's bring it down. I apologize in advance if you start hearing my dog whine. He's sitting here next to me, hoping to go for a walk. All right, so we've got the 180-day 4-hour chart. You can see here where we had this massive sell-off, which started the bear market that we're currently in. This past week, we did have a rally up from the 38.2 fib level that I drew based on that 30 to 40 year chart. This could turn into a V reversal. I'm not overly excited about that possibility yet. Let's just take a quick look at the 3-year chart, and I will show you why. Sorry, not the 3-year chart. Thought I had a 5-year chart up here, but I don't. So let's pull that up. Okay, so this is a 5-year chart, which would go back out to our last presidential election cycle. A lot of people are calling the bear or the bull market that we've been in for the last few years the Trump bump. So I'm curious to see whether or not we're going to correct back down into some of those lower levels that that existed prior to the election. Only time will tell. And then, of course, I want to go back out to this max available chart again. There have been, so if we take a look, 1983, the S&P E-mini was at 141.5, which is substantially lower than where we are now. A lot of these corrections have been 50% corrections off of their highs in the history of the E-mini. So I feel like there is reason to believe that it could come down. I think that the exact 50% mark off of this high would be like 1698 or 1700. And that would put us down here into this hypo zone that we drew on that low order flow node. And would also be right at that 50% fib retracement level in this zone. So we only time will tell. We can see where we were moving along the last election cycle. I kind of count the election as starting 2 years prior to the actual election date. So this 2014 would take us all the way up to the election. We played a bit between the 50 and the 38.2% level before we moved into January 2017 and got this massive bull market that people have been trading for the last couple of years. As you can see, we have already made 2 new lows. So I'm not inclined to believe that the bear market is over, or the sell-off or correction is over just at this point. Also basing that off of the amount of drop below. This is a 200 period moving average. When we had these little minor corrections prior to that, the sell-off didn't extend so far beyond that moving average. The last time it did that was during the 2008-2009, and then of course the tech boom and bust crash that we saw coming into 2000-2001 with a long, slow correction. So again, only time will tell. Anything could happen. The Fed may have some magic wand that we're not aware of, and this may end up being just a giant correction, V reversal here that pops up. But I would be more inclined to believe that this is probably a bear flag. So we've got dip, little bear flag, continuation down, dip, little trend up for the last week. I could see there being a continuation down into a bear pattern here. How far that will go, only time will tell. And I'm going to hop off here pretty soon. I just hadn't made a video in a while, and I figured that I would share my TA with you guys. I hope everybody's trading well. There's a lot of opportunity, but also a lot of risk. So please do make sure that you are being very cautious. Hopefully, if you're not very familiar with trading in times like this, you are just sitting on your hands. There is substantial risk involved in trading live money in any market. So you need to make sure that you are utilizing a strategy that works well for you, that you understand your financial situation, and that you are hopefully also consulting with financial professionals to ensure that you're protecting yourself and your family in the future. So this is a decent look here at the V that we're in the midst of right now. This is the 10-day 30-minute chart, and these I've got a lot more indicators on here than I have been using in the past. I'm using an indicator that shows me yesterday's high and low, just so that I don't have to manually draw those in every day. I'm finding that the EMini does play off of those pretty regularly. And I like to trade reversals when I'm able to, so I've been keeping a closer eye on those, and then also studying more about market profile and how to use it correctly and more efficiently. So I've been listening to a lot of James Dalton videos. If you haven't checked his stuff out, please do. I'm going to be posting a few more of his videos on the trade education playlist that I've got saved. But so what we've got here are the value areas high and low, and then our point of control here is noted in purple. That point of control moves once the price is traded out. And the value area, as I understand it, is the area where the most trading takes place. So we've seen a lot of trades moving in the last couple of days up in this area. I am thinking that this could potentially be a bit of a head and shoulders pattern, or the end of this bear flag that we were talking about just a few minutes ago. So it wouldn't surprise me at all if over the next, I don't know, few weeks or few days, we see a return down to this 2174 level, and possibly a trip down into the 1700 zone. So just keep your eyes open for that. Make sure that you are taking measures to keep yourself safe, and that you are managing your capital so that you can keep trading tomorrow. And with that, I'm going to go ahead and hop off. I have some other things I'd like to do today, but I just wanted to check in and make sure everybody was doing well. If you have any questions that I might be able to answer, please pop them in the comment section and I will get to them eventually. Again, trade at your own risk. Don't take anything that I say in any of my videos as a trade recommendation. You need to do your own due diligence and make sure that you understand the risk that you are exposing yourself to. Futures are a tricky beast, and if you're not aware, you can lose more money than you actually have in your account, substantially more. So make sure that you are taking the time to understand the products that you're trading and that you have a stock in the market. All right, I will check you guys out again hopefully soon. Bye.